Apple has just made a landmark announcement. Over the next 4 years, the tech giant will be investing $600 billion in the United States. This is $100 billion more than their original commitment, signaling an even greater push towards domestic manufacturing. For the first time ever, every new iPhone and Apple Watch sold globally will feature cover glass produced in Kentucky. This is not just an investment in American manufacturing. It is a clear commitment to reshoring the technology and production that have long been associated with offshore labor. As part of its ongoing strategy, Apple will continue to hire in America and build the core technologies that power its products. Right here, the United States has secured another victory. President Donald Trump's administration has brokered an additional $100 billion in investment, with a promise to make key components of Apple's devices domestically. The optics of this announcement cannot be overstated. With each new development, the narrative of America's resurgence in manufacturing gains momentum. This announcement was not just a corporate decision, but a reflection of the broader political landscape. Kevin Noir, chairman of Ori Ventures, spoke candidly about the significance of the meeting at the White House. It's clear that the Trump administration has managed to create an environment that encourages such large-scale investment. Under Trump's watch, American manufacturing is being repatriated, with companies like Apple now showing a public commitment to bringing jobs back to American shores. However, this shift is not without its complexities. There are two distinct types of meetings when it comes to interactions with President Trump. One, like the recent Apple meeting, is a positive engagement, showing the world that corporate leaders are willing to invest in America. The market responds to this type of meeting, with Apple's stock gaining billions in value after the announcement. The other type of meeting, as we've seen with leaders like Ukraine's Zelensky, is far less favorable, casting a shadow on the policies and causing market turbulence. The market's reaction to the Apple news was telling. Investors, despite not having all the details, interpreted the announcement as a positive signal of Trump's economic policies. This good meeting between Trump and Apple's CEO, Tim Cook, sends a clear message. The administration's trade policies are working, and Trump's backing of American industries has real, measurable effects on stock prices. From a macroeconomic perspective, this aligns with the broader vision of Trump's trade and tariff plans. The president's goal is to bring American manufacturing back to life, reducing the country's reliance on foreign-made goods. Companies like Apple, which have long been the poster children of offshore manufacturing, are now taking steps to bring production back to the U.S. This shift is part of a broader narrative where the U.S. is no longer accepting trade imbalances and is instead pushing for fairer terms both for businesses and workers. Yet, there is a fundamental question at the heart of this reindustrialization. How quickly can the United States build the infrastructure required to support this shift? While Apple's announcement is a major step forward, it's essential to acknowledge the long-term nature of manufacturing. Building factories and securing supply chains takes time, often decades. Rebuilding the kind of manufacturing capacity that once existed in the U.S. before the offshoring era requires more than just capital. It requires investment in human resources, infrastructure, and the time it takes to develop a skilled workforce. Despite these challenges, the signs are promising. The policy environment is moving in the right direction. The S&P 500 is at all-time highs, reflecting a market that is adapting to the volatility created by these policies. From an investor's perspective, the U.S. market's resilience speaks volumes about the effectiveness of Trump's economic policies. The trade wars, while disruptive, have created a more competitive environment for U.S. businesses, encouraging companies to reconsider their overseas production models. However, Trump's aggressive tariff strategy, particularly with countries like India, is a nuanced part of this larger economic picture. The president has used tariffs as a tool to exert pressure on countries that engage in practices he deems unfavorable. India's continued trade of Russian oil has drawn the ire of the Trump administration, and the potential for further tariffs on India could have profound implications for global trade dynamics. The idea of using tariffs as a strategic tool to limit access to the world's largest consumer market is an unprecedented approach, but one that seems to be bearing fruit. The broader geopolitical implications of these tariff strategies are complex, With Trump taking a hard stance on countries like India and Russia, the U.S. is reshaping the global economic order in real time. This shift isn't just about trade wars. It's about signaling to the world that the U.S. is prepared to leverage its market power to secure its interests. The economic fallout from these moves will likely reshape the international order as countries seek to balance their own interests with the reality of a more protectionist U.S. For the average American factory worker, this is generally good news. The reindustrialization of America, while a long-term project, signals a shift away from the outsourced labor that characterized the late 20th century. The promise of jobs returning to American shores is a significant one, and it is being realized through these corporate investments. However, it's important to note that not all industries are experiencing the same level of benefits. While steel and agriculture are seeing clear advantages, other sectors are still grappling with the realities of international trade. The next challenge will be the fine-tuning of tariffs. Certain industries, such as those reliant on specific raw materials, like potash, face challenges. For instance, American farmers depend on potash imported from Canada. Imposing tariffs on such materials would only harm U.S. industries, which is why the Trump administration must balance protectionist policies with practical considerations. In cases like these, targeted exemptions or adjustments are likely to become part of the broader tariff strategy. This careful balancing act is part of a larger vision for American economic revival. The promise of reshoring manufacturing, especially in high-tech sectors like semiconductors and AI, is a bold one. But the reality is that these changes will take time to materialize. The goal is not just to bring jobs back, but to create a competitive and sustainable manufacturing ecosystem in the U.S. that can withstand the pressures of global competition. In conclusion, the announcement of Apple's massive investment is emblematic of the broader trends that are reshaping the American economy under President Trump's leadership. While challenges remain, the administration's policies are creating a foundation for a more robust and self-sufficient industrial base. The long-term effects of these decisions are still unfolding, but one thing is clear. America's economic landscape is being redefined in ways not seen in decades. The question now is whether this trend will continue and how other global players will respond to the new reality of American economic power. The next few years will be critical in determining the trajectory of this transformation.